Yeah, hello and welcome to another update video about Solana. Solana is still coming down in this descending wedge, and we've made that new low that I wanted to see. So hopefully that forecast helped quite a few people. However, at the moment, it looks to me we should get another low. At least the analysis would tell us that one more low would be anticipated. Because the pattern isn't full yet. I would like to see one more low in this C wave. So let me take you through the entire wave count actually, because we've got new viewers every day, you know how it works. So looking at this entire structure, that shows the price development of the December low, okay? And of the December low, our view is that we rallied in a 5-wave move. By the way, if anybody's interested in long-term targets, check out our long-term video playlist. We do have a video there for Solana as well that talks about the new all-time high targets. By the way, we have quite a few coins in there, yeah, so check that out. So we had an impulse to the upside in a wave 1. The current view is that this here was a wave 2, basically the same wave degree as this one, that we came down in a nice ABC correction and formed here a lasting low in a wave 2. Hit our trend reversal area, turned around pretty much in the center, and we are now basically in a third wave. That would be the expectation that could take us to $40 and beyond, that third wave, and it should be quite bullish. But that third wave, of course, consists of 5 subwaves. It will not be easy, it will be a rocky road, and it will be an up and down. But tendency should be prices will go higher, and to make this, or to keep this scenario alive, we should stay above 1778, yeah, because the idea is, if we really are in the third wave, that we're following this roadmap to the upside in a 5-wave move. 1, 2, 3, 4, 5. And we're now in the wave 2 correction. That wave 2, to remain likely a wave 2 and not something more bearish, needs to hold 1778. That's a bit like a threshold level, a pivot point. A break below 1778 would not invalidate upside potential, but it would make it quite unlikely in this wave count. And invalidation will occur below the beginning of the small wave 1 here, which is at $16. Below $16, however, there is still one more bullish scenario left, because what technically works is, because this was an impulse, at least we can count it like that, that the wave 2, which at the moment we assume bottomed in March, would be reset. So that means if we break below 1778 and follow through to a break below $16, we can still say, okay, maybe it has another chance, and maybe all of this is wave 2. We just didn't see it, or because it's currently not very likely. It is likely, otherwise I wouldn't show you, but it's sort of not the present scenario, because we're still holding support of the other scenario. Well, in this scenario, then, the move down into the 10th of March would just have been a B wave. An A wave. This here would have been a B wave. Or even a WX. And now we're coming down, well, possibly in a C wave or a Y wave. They're both possibilities. So it would come down here like that, right? And then would have a C wave. But we need to hold $12 for that. So 1778 is one pivot point. $16 is invalidation. And then for that larger degree scenario, we have another pivot point at $12. But already below 1778, new bear market lows will become more likely. And below $12, they would become the primary expectation. But from here then, this would then form obviously the wave 2, and we could still rally from here. So these are the two scenarios that we're observing. But at the moment, I don't see any reason to change the current one, that we're just in a lower degree wave 2, because it hasn't been invalidated, it's slowing down, and price action suggests that the next low could be the last one, right, in this wave 5. So looking at this structure, then we talk about, okay, we're in a wave 2 as a WXY structure. And if we're coming down in the Y wave, we're looking at, first of all, in the Y wave, at an ABC structure. A wave, B wave, C wave. And in the C wave, 5 waves. Wave 1, done. Wave 2, done. Wave 3, done. Wave 4, done. Wave 5 currently in the making. Bear in mind that I have to count this move down as an ending diagonal. So it might shift a little bit here and there, the wave count, because you deal with corrective subwave structures. But forecast in the last video was to get another low. That happened, but we haven't touched the $19 level yet. That's the 61.8 retracement. And the micro count suggests we should get one more low. Now, we don't necessarily need one, but we should. Let's remind ourselves of key targets, because, I mean, the $19 level is one of the targets. I did talk about that, but now that we're getting closer, we need to look at additional targets. And I talked about not only the $19 level, because we also talked about, I think it was something like $18.30 or $18.70 here, which is the 1-to-1 ratio of wave A and C. So that's at $18.70. That's another level to watch for a possible bottom. I think we've got here $19, $18.70, and $17.78. Bear in mind, it's now in the support area. It's doing what we want it to do. And I think we should get one more low, but it's now the time that we need to be watching for reversal. Yeah, it's like it's increasing in probability, because we're heading down further. We're in the wedge still, but we've hit the support area of the wedge, so some kind of a bounce was anticipated anyway here in this fourth wave, which might be happening now, which ideally stays below $20, but doesn't need to necessarily, but would be ideal. And then we could head down, because $20, obviously that was previous support, that may act now as resistance as well, and it's the wave 1 low, and then we may head down for one more final low here. Yeah, bear in mind they can always extend, but the mindset needs to be we go down lower until we see a reversal. But you can see that we are getting towards a price where buyers and sellers are probably going to agree, and probably have agreed already. We just don't know yet where price will go, because you head here into this wedge pattern, in this, price getting constrained, heading into this apex, and that's obviously the area where buyers and sellers are agreeing on a price where it will reverse somewhere here, ideally. Yeah. Obviously, a break of the wedge to the downside would indeed be quite bearish, and that would unlock the potential of the alternative scenario. Okay, which is also bullish, just allows for a deeper pullback, but price should break to the upside, because they normally do that out of these wedges. Now, if it still breaks down, it is what it is, right? I mean, we are here in a probabilistic environment. It is true that descending wedges most likely break to the upside, but there is still a chance, like 20 to 30%, that it breaks down. That's what they normally do. I mean, in 20 to 30, that's quite a lot actually. They do break down as well. So until we get the breakout, we don't know, but we can expect a break to the upside, because that happens in most cases, but doesn't mean it will happen this time. That's the uncertainty we deal with in these markets, okay? Unfortunately, on the daily time frame, we don't see a bullish divergence yet. I would like to see that. But as you can see, it still has space to travel down further. So all the way to 1778 possibly, and this can drag on for a bit. But it's good to see it's following the analysis, following the pattern, following the structure. So I keep you updated. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.